Earlier this year, it looked like the Northern Ireland economy had lost momentum, with private sector activity, house prices and new car sales all falling. More recently, however, we've seen more encouraging signs emerging, but overall it's a somewhat mixed picture. Following a brief dip into deflation territory in April, UK consumer price inflation turned positive again in May, although the annual rate of inflation at just 0.1% still remains at very low levels. Consumers are benefiting from a boost to their disposable incomes as they're experiencing wage increases at the same time as consumer price rises are largely stagnant. New car sales, which are a key indicator of consumer confidence, were down again in May by 3% relative to the same period last year. This indicates that Northern Ireland's consumers still remain cautious. The latest figures for the first quarter of this year revealed that manufacturing output has almost returned to pre-recession levels. Indeed, the engineering sector has recorded extremely strong growth and is up 2/3 from its low and up 10% over the last year. Exchange rates remain a challenge for Northern Ireland exporters. This is significantly eroding the price competitiveness that our exporters enjoyed in the Eurozone during recent years. In terms of the labour market, there were further gains in employment growth in the first quarter of this year, albeit the pace of growth is slowing. The number claiming unemployment benefit in Northern Ireland fell by a further 1,000 people in May. The claimant count now stands at 43,400 and it has now fallen for 27 months in a row. The latest Northern Ireland Residential Property Price Index points to a fall in house prices in the first quarter of the year, a decline of 1%. This marked the first decline in 8 quarters. Over 4,000 residential properties were sold in the first quarter of this year. However, this is down 9% relative to the same quarter last year. Looking ahead, inflation is unlikely to stay at these extremely low levels for much longer, and interest rates will eventually rise, in our view, in 2016. Public spending cuts will continue to bite, and exchange rates in terms of euro sterling will continue to negatively impact on exporters. On the positive side, some of the indicators for the local construction sector suggest that a long-awaited recovery is in train, with house building on the rise and an increasing number of commercial developments coming on stream too.